Concerns over trade tensions driving some mainland Chinese firms to raise funds in Hong Kong rather than New York. The Hong Kong Exchange seeing 44 newly listed companies in the first 6 months. That's up 47% from last year. Wong finds out whether this frenzy might be sustainable.
3、2、1，敲！祝贺宁德时代在香港交易所成功上市。
This is music to the ears of the Hong Kong authorities. The gong at the Hong Kong Stock Exchange has been striking over time for a slew of new listings, including the biggest IPO so far this year, which helped lift the IPO funds raised for the first half of 2025 to $13.6 billion. That has already surpassed the total raised for the whole of last year.
I think the trend will keep on or even accelerating more so than in the first half. This is a perfect window for IPOs. One, interest rate is low. There's still expectation that interest rate could go lower, maybe once or twice. The economy is at the bottom and it is in an inflection point of going up. Third, the overall valuation is still not demanding.
The momentum is likely to continue as companies seeking IPOs will likely gravitate towards markets where strong investor demand is driving up valuations, though that has led to concerns that the market is overheating. And with Chinese companies accounting for almost all of the new listings so far this year, there are worries that Hong Kong's global status may be diluted.
When the market is booming, people sometimes, because the fact that they want to get it into an IPO, they just come into play and subscribe anything that's in the market. And since the demand was massive, the actual valuation of the newly listed IPO may have some so-called buffer on the technical side, not necessarily reflected the fundamental value on the valuation. Hong Kong always want to position ourselves as an international capital markets. We don't want to simply be merely a China sort of capital markets offshore version. We always wanted to be competitive as NASDAQ, SGX, being very international and diversified. So dominating with that would be an issue for some global investors looking into Hong Kong.
Last year, consumer and retail sectors dominated the IPO market. This year, observers expect to see more listings from the tech and healthcare sectors. Like the weather in Hong Kong right now, the IPO market here is hot and will likely continue on this sizzling streak for the rest of the year. Hong Kong now has already regained its spot as the #1 location in the world for fundraising. Some global major accounting firms also expect a total of between 80 and 100 listings for this year, taking total IPO proceeds to exceed $25 billion. Wong, CNA, Hong Kong.